Hey, what's up YouTube? Welcome to the live econ guy. In this video, I want to talk about the dollar. You probably saw recent news the past couple of months that the dollar keeps getting stronger and stronger. Today, September 21st, 2022, the dollar index is at 111, which is the strongest it has been in over 2 decades, so since around 2001. So I've been looking at a few articles, which I'll link down below, and I want to discuss a few reasons why the dollar index keeps growing. So this is one of the articles that I've been looking at. It's from the NPR. Pretty much they're saying the dollar is growing, and some of the reasons that they are mentioning. Obviously, we have growing interest rates to combat inflation, so the Fed has been raising those rates, which essentially pushes up the yields on U.S. Treasuries. So essentially, people from all over the world want to invest in a safe and liquid asset. And right now, for example, the one-year Treasury gives a yield of 4.1%. So people want the dollar in order to buy those treasuries. We also have the balance sheet runoff, which soaks up a lot of the dollars that are currently in the system. So essentially reducing the liquidity of the dollar. So less dollars to go around and buy those U.S. treasuries. We also have demand for U.S. goods. So pretty much this article mentions the war in Ukraine. So that's huge. We have the Ukraine wanting U.S. weapons. We have the Ukraine wanting all sorts of goods from the U.S. And to get those goods, it needs the U.S. dollar. And it needs a lot of dollars. So they're buying the U.S. dollar with their currency, the hryvnia, and essentially that pushes up the cost of the U.S. dollar. We also have Europe, who is heavily now dependent on U.S. for energy. So energy, oil, and other goods that they would have otherwise bought from Russia, but now they cannot because of all of the sanctions. So all of the Europeans right now are exchanging the euro for the dollar so they can buy goods from the U.S. And there's other countries all over the world like Brazil, Argentina, who deal in the U.S. dollar. And a lot of their debt, government debt and private debt, is written in the U.S. dollars. So in order to pay back those debts, they need to get dollars. And dollars are now harder to come by, so the price of the dollar or the dollar index keeps going up. And essentially, you might ask, what is this going to come out to? What is going to be the results? I think dollar deflation is something that is going to happen, and there isn't much we can do about it because the U.S. is combating inflation and the Federal Reserve has those dual mandates, price stability and labor market stability as well. So we're going to continue to see rates hiking. The conflict in Europe seems to be escalating. If you've been watching the news, Russia is mobilizing. So we can only see and expect more exports happening in the future. And another thing I want to share with you guys is a news release from the Bureau of Economic Analysis. So this essentially talks about the United States international trade in goods and services, and this is as of June of 2022. So our trade deficit is going down, surprisingly, even though the dollar keeps growing. The reason is, like I said, we're exporting a lot of goods to Europe, both to Ukraine and to the European Union. They're buying energy from us. They're buying all sorts of stuff from us. So I think what will happen is the deficit, the trade deficit that currently exists, it'll keep shrinking, and the demand for dollars will continue even though it keeps growing. So this might bring forth a slight recession, and I think there's nothing we can do about it. It's just the way that things are happening in the world right now. We have a war, we have inflation all over the place, and I think the Fed is going to continue to hike their interest rates. Jerome Powell today specifically reassured us again that they're going to continue hiking interest rates. There's nothing that can be done about it. There's no other tools essentially, and the balance sheet runoff is going to it's going to be it's going to start happening at elevated levels in the coming months. So we'll be seeing those mortgage-backed securities, hopefully, and the U.S. Treasuries rolling off the balance sheet. So I think what the Fed is saying, that there's pain ahead. It's not a bluff. It's going to happen. So what can we do about it? Hold some dollars, I'd say, because there's going to be a huge demand for those, and goods and services are going to essentially become cheaper relative to the US dollar. So that's all I wanted to share for today, guys. I'm going to leave some links down below where you can see these articles and this news release that I've been looking at. Let me know what you think, how this is impacting you, and what you think is going to happen. Thank you for tuning in.